Hi fellow traders. After reaching $100 index returned to the downside with a very fast speed, and you can see it has made this engulfing bearish candle. So I'm looking at many currency pairs to understand which currency should I buy against US dollar. In other words, I'm looking which currency which currency should I sell US dollar against. So the plan here is to sell US dollar. So let's compare. If we look at the chart of Euro USD, yesterday Euro has gained versus dollar, pound has gained versus dollar, but the gain is very less. So Euro is stronger than pound yesterday. New day has started today. It has been 21 minutes in the new day. Australian dollar has gained significantly versus dollar, and its gain is even bigger than the gain of Euro. And if you want to compare, you can easily put Euro odd here, and you can say that there was a bearish candle on Euro. It means the gain of Euro was less than that of Australian dollar. So after comparing Euro, pound and Australian dollar, we can clearly see that the Australian dollar is stronger than both of these two currencies. So rather we should buy Australian dollar versus US dollar. We'll look at other two currencies, New Zealand dollar and Canadian dollar. New Zealand dollar also significantly gained yesterday. So now let's compare AUD and NZD to understand which one is stronger. So put AUD NZD here. So we can see that if we look at the entire movement of the daily candle, then Australian dollar has been stronger than the New Zealand dollar yesterday. And now we'll go to USD CAD. Canadian dollar has been significantly stronger than US dollar yesterday. So we have now Australian dollar at the top position. Second position was New Zealand dollar. But now let's compare AUD, NZD and CAD to understand which one is the strongest. So now we'll plot NZD CAD here. So you can see NZD and CAD stayed almost at equal. This candle was a doji candle with wicks to the upside and downside, with the closing happened very near to the opening point. So these are the three currencies which I am considering to buy against US dollar. Now the question is, why am I not just buying Australian dollar? Why am I not leaving Canadian dollar and New Zealand dollar? And the answer is diversification. I'm diversifying between these three pairs. If before I go and explain, let's compare other currencies as well. If we look at USD CHF also gained, but its gain was even less than the Euro. And if we look at the US dollar versus Japanese yen, yesterday US dollar was stronger than Japanese yen, so there is no requirement of considering Japanese yen here. And we already have a sell position in USD JPY with the target at 61.8, this area. So now we have these three currencies, AUD, NZD and CAD, with Australian dollar at the first position in strength, and New Zealand dollar and Canadian dollar at second and third position, or you can say both are almost equal in the strength as per the gain of yesterday. So now let's look at the setup. The reason I'm considering these two currency as well, New Zealand dollar as well as this USD CAD, is the setup on their chart. If we look at the USD CAD, you can see that the USD CAD has been making lower highs. Previous high was this, now this is lower high, and yesterday it made even lower high and it came back. If we look at the low, it made lower, here was a previous low, then it made a lower low, then it made almost equal low, and this 38.55 has been a horizontal support area. So market may reach 38.55 easily. If we look at the 4-hour if we look at the 4-hour time frame, there is a bearish divergence. While price made a higher high, if we look at this new high is slightly higher than the previous one. The oscillator, or you can say the MACD, made a lower high. So this is bearish divergence, plus it's a kind of double top. There is no big difference between these two tops. So these are the double tops with this as the neckline, and this neckline has been broken down, and this big bearish candle has already closed well below the neckline. If we draw neckline horizontally, here will be the neckline. Look at this horizontal line, 1.4008. So now I'm going to sell this after retracement to the upside, and I'm gonna sell this at 30% retracement. We have double top, we have bearish divergence, we have this tendency of making lower highs, and we have this horizontal support at 38.55. So I'm going to target 38.55. So here we have the stop loss of almost like 156 pips and take profit of almost 160 pips. So this is giving us equal risk and reward, and this trade is looking good. So this is the one trade, but what I'm going to do here is to diversify my risk among these three currencies. Generally I take 3% risk. Now I'm going to take 1% risk in AUD USD, 1% in NZD USD, and 1% in USD CAD. So all of these three currency pairs are not three different trades. These three are, for me, in terms of risk, is a single trade. Basically I'm splitting my lot size into these three currency pairs by 1/3. So this is how I'm trading USD CAD and USD and NZD USD. Now let's go to NZD USD. What I found here, I took NZD USD in consideration for trading along with these two currency pair because of the recent acceleration in New Zealand dollar. If you look at Australian dollar, because Australian dollar was was the strongest among these three. So if we compare Australian dollar versus New Zealand dollar, of course Australian dollar has been stronger if we look at the overall movement of the entire day, but New Zealand dollar has accelerated its speed in last few hours, and that's why you can see the recent fall from this to this point. It was 31 pips. So this is why I am taking New Zealand dollar as well for trading, along with along with these two pairs. So this is the one reason. Another reason is setup on New Zealand dollar, and let's look at the setup on New Zealand dollar. So now again going back to the NZD USD. First of all, look at the daily time frame. What we see here, initially this was a trend line. If we join this low, and this was showing a pretty fast speed, then market was slowing down and made new swing low here. If we join this swing low and this swing low, we have this trend line. Trend line is very slow, kind of flat trend line, but now market made this new swing low, which is giving us a new deviated trend line to the upside, and this deviation is good for bulls, because this deviation is showing us better speed than the previous trend line. Plus this recent candle made an engulfing candle, where this candle has engulfed all three previous candles. So this is a bullish engulfing candle, plus the speed is increasing as per the deviation. And if we look at the 4-hour time frame, here we have lower low. First of all, let me make the chart clutter free. So I'll keep this line only on 4-hour, and these trend lines only on daily. Okay, just one sec. Okay, all right, I'm done. Now let's come to 4-hour. So recently, if we look at the 4-hour time frame, this price made lower low, but the oscillator made higher low. If we compare these two low, slightly higher low has been made by the oscillator. So this is bullish divergence, and this bullish divergence is also supporting our idea of buying NZD USD. So we have bullish divergence, market has crossed above the previous high. This was the previous swing high. For downtrend to continue, this leg should not cross previous swing high, so it should be in a tendency of lower high and lower low to continue the downtrend, but a recent movement already crossed the previous high, so it's suitable for the bulls. So these are all the reasons why I'm suggesting to buy New Zealand dollar. Now I'll show you where to buy. Before we look at 4-hour time frame again for determining our stop loss and take profit, let's look at the 1-hour time frame. We have a great deviation on RSI from the line 50. It was a nice movement to the upside plus nice crossover of RSI above 50. It fell back, price fell back to the downside. That was just a minor retracement. RSI fell back to the line 50 and again price moved up. So this tendency is not just A, B, C, D retracement. If it was a retracement, this should have been a slower movement, but this movement to the upside is faster than the movement to the downside. If we look at the previous downswing, look, if we compare this movement to the downside and this movement to the upside, this is a faster. So faster movement to the upside, RSI above 50, staying above 50, and these bigger bullish candles are why we can buy New Zealand dollar with confidence here. We have a great bullish confidence. So now let's compare our stop loss and take profit. So here I'm suggesting you to buy at 23% retracement. We are gonna get very nice SLNTP. You can go at 30% retracement, maybe 60, 62.3 or maybe 60, 67.9. Both are very near to each other. I'm rather buying here 60, 67.9. I'm buying at 60, 67.9. So my stop loss is gonna be 76 pips and take profit will be 106. We can keep take profit either at the previous high or at this 78.6% of this whole move down from this point to this point. This 78.6 line is the Fibonacci 78.6% retracement level of this swing on daily time from this high to this low. So there is a huge difference of 65 pips between the previous high and this high. So either you can target the 78.6 or you can target previous high. I'm rather targeting just previous high. Maybe I will get again some downside retracement to buy again to target the 78.6 in the next trade. I'm targeting this previous high in this current trade. So this is the one trade on New Zealand dollar. Now let's go to our USD and I'll show you what technical setup we have on AUD USD. If you remember the previous trade of Australian dollar, that was against Japanese yen and that was a sell trade, and that target has successfully been completed. I had told you that the 61.8 of this ABCD or 127.2 of this retracement will be the minimum target. Price has completed this target and then very fast movement to the upside has been shown by the odds APY. So while I was analyzing Australian dollar last time for this sell trade, I had told you about this deviated trend lines, and the deviation was equal to previous deviation. So this was the first trend line joining these two swing low. This was the second trend line joining this swing low and this swing low, and then we have a third trend line joining this swing low and this swing low. Price had slightly crossed below this deviated trend line, and that is where Australian dollar was showing a significant weakness. But yesterday Australian dollar came back and returned back above this deviated trend line. So this is very very harmonic, and I think Australian dollar is going to even cross above this previous trend line. So this is very good sign for the bulls. Another thing is RSI return right from the 42 area, just like last time it has returned. So this is also very good bullish sign. But the only problem here with RSI is, first of all, let me change these levels because I do not use 30 and 70, rather I use 20 and 80. For me, 70 on this RSI 5 is not overbought. So this is 80. So we have enough room to reach 80. That's why there is enough room for price to go up and touch at least the previous high, or even it can cross the previous high, but I'm going to target only the previous high. Let's look at the 4-hour time frame. We have similar situation here, just like we had on USD CAD. We had a double top on USD CAD. Here we have uh, double bottom. So this double bottom has been successfully executed by the market as a breakout. This breakout took place. If we draw the neckline here, this will be the neckline, this 64.75.7. So neckline has already been broken, and this candle already closed above the neckline. Now we will wait for the retracement, and I'll buy at this 30% retracement. Stop loss will be 91 pips below this low, and take profit will be almost 99 pips right at this previous high. What another factors we have here? We have a bullish divergence. If we look at this low and this low, market created here the higher low. At the same time, if we look at the oscillator, you can say MACD created a slightly lower low. This is hidden bullish divergence, and market while going down could not break below this previous low. So this was just a retracement against this previous movement to the upside, because this couldn't break below this low, and now already broke this high. So this is very good setup for the bulls, and this trade can be taken. So now we are going to take all these 3 trades. That's all for this Friday. Let's see when we get the target. Maybe on Friday, maybe on Monday. We'll be holding our position even in the weekend. Thank you for watching.